As we fasten our seatbelts for the fiscal evolution of 2025, the first destination on our financial journey leads us to a stock market performance expected to remain neutral, with historical indicators suggesting that the next financial turmoil will not emerge until around 2035. A sense of cautious optimism prevails. The proactive roles played by governments in India and the US are likely to provide a safety net, ensuring that while market corrections of 15 to 20% may occur, the fear of significant crashes remains unfounded. Investors should brace themselves for average returns, marking 2025 as a year for carefully navigating opportunities without reckless abandon. Transitioning from macro trends to corporate earnings, we can glean a picture of moderate growth on the horizon. The extraordinary liquidity that characterized the pandemic years is fading, slowing the pace of earnings growth to a more sustainable 10 to 12% annually from 2023 onward. This moderation presents a landscape ripe for exploration, with the potential to unearth undervalued stocks that promise substantial returns, provided investors engage in diligent research and solid fundamental analysis. Our path diverges into the realm of artificial intelligence, AI, where we anticipate an exhilarating acceleration. This sector, soaring from $184 billion in 2022 to a projected $826 billion by 2030, beckons savvy investors. Companies pushing the boundaries of AI innovation will soar in performance. Thus, it is imperative to weave AI assets into our investment portfolios, whether through ETFs, mutual funds, or individual shares, as we tap into this exponential growth trajectory. Amidst these forecasts, swing trading on the Nifty presents an alluring prospect. The recent Nifty 50 correction of 11% reveals short-term opportunities for traders looking to capitalize on momentary market fluctuations. This strategy not only offers the potential for immediate returns, but also aids in constructing a robust long-term position, provided one employs technical analysis to optimize gains. Meanwhile, international dealings face constraints. The tightening regulatory environment surrounding Indian investors in global markets necessitates the urgency of establishing international trading accounts to diversify assets and cushion against the depreciating rupee. Having sufficient cash reserves, ideally 20% of your portfolio, will empower you to seize unforeseen investment opportunities when the market dips, while remaining cognizant of Bitcoin, which promises modest returns amidst its ongoing evolution. With these insights, we equip ourselves for the challenges and prospects that await in the economic landscape of 2025. Preparation, research, and an adaptive mindset will be the cornerstones of successful investing in a future buzzing with potential. In the evolving landscape of the global economy, recovery trajectories across various nations are critical for future stability. As China's recovery gains momentum paired with the persistent growth of the United States, the global economy is poised for stabilization. Economies such as India are expected to experience steady growth as well. Yet they face substantial challenges, particularly in the adoption of artificial intelligence within their IT sectors. Addressing these hurdles will be essential for India to harness its full economic potential, while contributing to global growth. In parallel, a prominent trend in the investment world is the rising momentum of environmental, social, and governance (ESG) investments. As investors become more conscientious, there is a palpable shift towards companies that prioritize sustainable practices and social responsibility. Firms with robust ESG scores are likely to attract significant capital, positioning themselves as attractive options in long-term portfolios. Consequently, traditional investment strategies are transformed, steering attention towards sustainability as a crucial component of financial growth. Additionally, the renewable energy sector is poised for explosive growth, reflecting a global commitment to clean energy transitions. Governments worldwide are expediting investments in solar, wind, and electric vehicle infrastructure, anticipating significant returns as demand for renewable energy surges. This growing sector not only represents an opportunity for investors, but also underscores a collective shift towards a more sustainable future. Real estate, especially in emerging markets like Dubai, is ripe with potential for lucrative returns. The strategy here focuses on distressed or undervalued properties located within metro areas, offering opportunities for high rental incomes. The allure of such real estate investments lies within the promise of burgeoning economic landscapes fueled by globalization and urbanization. In the digital age, cybersecurity emerges as another critical field. With escalating digitization comes an unparalleled demand for cybersecurity solutions, making companies in this realm vital components of tech-heavy investment portfolios. Their services will serve as a safeguarding layer in increasingly complex digital ecosystems. Meanwhile, the healthcare and biotech industries continue to innovate, focusing on personalized medicine and AI-driven diagnostics. Long-term investors should keenly explore opportunities within leading firms and groundbreaking startups in these domains. Despite persistent concerns regarding inflation, experts suggest that interest rates are likely to be elevated yet stable, creating an advantageous climate for sectors such as financial services. Moreover, commodities such as gold and silver will maintain their relevance as safe haven assets, while industrial metals like copper will cater to burgeoning demands from renewable energy and electric vehicles, reinforcing their place in diversified investment portfolios. As the dust settles from recent fluctuations in interest rates, a compelling narrative is emerging for the bond markets. The stabilization of interest rates is heralding a new era, making bonds particularly appealing for risk-averse investors. In a world where uncertainty often reigns, the allure of steady and predictable returns is drawing attention back to bonds. One of the key players in this landscape is high-quality government bonds. These investments not only promise a level of safety, but also align with the fundamental principle of wealth preservation. When global markets experience turbulence, expert investors recognize that reliable government bonds can act as a safe haven, reducing volatility across diversified portfolios and sustaining wealth amidst economic storms. Equally noteworthy are corporate bonds, particularly those issued by reputable enterprises. With careful analysis and strategic selection, investing in corporate bonds can yield attractive returns while still maintaining a substantial degree of stability. In contrast to equities that can sway dramatically based on market sentiment, corporate bonds offer a lifeline of consistent cash flows, providing investors with income that can be reinvested or utilized for other financial needs. As interest rates remain stable, the potential for capitalizing on corporate bonds becomes increasingly alluring. As we look ahead to 2025, the bond market is poised to reshape investment strategies. Investors who once leaned towards equities may now reconsider their allocations, driven by the quest for efficient capital management. This transition underscores the importance of having a well-rounded investment approach that seamlessly integrates bonds, irrespective of one's risk appetite. By embracing a diversified strategy, individuals can achieve stability and potential growth without succumbing to the whims of the stock market. In conclusion, the forthcoming stability in bond markets could pave the way for a significant shift in investment dynamics. As we prepare to navigate the challenges and opportunities in 2025, staying informed about the bond market's potential is crucial. Engaging with peers and financial experts can strengthen your understanding and approach. If you found this insight valuable, consider sharing with friends or subscribing to stay ahead in finance. Here's to informed investing and a prosperous future.